every MSME owner knows that GST is a tax, but only few realize that GST is also your hidden credit report. Till now, you have seen that banks ask for your balance sheet and they do the loan on the basis of your balance sheet, how strong your balance sheet is. But now, as AI is rapidly changing and technology is upgrading, things have changed. Now, banks look at the balance sheet only as their compliance process. Your ratios are fit as per their policy, and then they quietly check your GST returns, your filing frequency, your compliance history. What? You are saying why? This is because GST is the most reliable proof of your business transparency and discipline. In short, if you ask me, it's your GST behavior is equal to your bankability. Now, this episode is titled GST Compliance and Bankability. What every MSME must know. Now, because whether you are applying for a CC limit of say 5 lakh or maybe a term loan of 5 crore, now compliance can make or break your chances of the loan. So, just to learn more, stay tuned and hear up till the end. Now, you will ask why compliance matters beyond tax. So, let's clear this misconception. Compliance is not only about avoiding these penalties. For banks, compliance is your behavioral data. Your timely GST filing shows your discipline. Your late return shows stress or poor management or maybe poor system. And if there is a repeated mismatch between your GST and sales, this is a big red flag. Think about it. If you can't manage your tax deadlines, how will you manage your EMIs? Say something? No, right? Okay. Now, for banker, compliance is a window into a financial culture. Now, banks don't just rely on your financial statement, they pull your GST data directly from portals. Yes, it's true with your consent. But if you have given your file for loan process, I don't think you have an option to say no, right? So you will give your consent to bank, right? And they will pull your GST data directly from the portal. Now, they match your GST turnover with your declared sales. They track monthly filing behavior. They also cross-check your supplier invoices and ITC claims. Even they check how many forms you have registered with your PAN card. Maybe you are not running the multiple businesses. This also your GST data shows them. Now let me explain this with an example. There are two firms, say suppose firm A or firm B. They both have sales turnover of say 1 crore in their balance sheet. Okay. Now the firm A that files its GST returns every month consistently with 8 to 9 lakh turnover. Then there is firm B we were talking about. This files its GST return irregularly with many spikes and with gaps. Now, what do you think? Which one looks trustworthy? Always firm A, right? Now, this is what GST tells us. GST is not just about a tax, it's your credibility certificate. Now, compliance is not just GST. You think if it's only GST, no, it's not. Bank also check your TDS and income tax filings. And if you delay them, this shows that you are delaying TDS and this is a stress. Bank also check your PF and ESI payments. Now, skipping your employees' dues, this is a big red flag and it shows that you have a weak management. Bank also checks your ROC filings. This is a must compliance for them. And if you miss any of your annual filings, this is always considered as negligence on your part. And they also check your statutory audit timelines. If you have late audits continuously, this shows your poor governance. You don't pay attention to your compliances. Now, every missed compliance is just like a check return. It reduces your trust and your chances for your loan. So, Now you will ask how compliance shapes rating and your limits. Now let me tell you, CIBIL and other credit bureaus, they have now integrated compliance signals. Irregular GST filing affects your credit profile indirectly. Yes, this is true. Consistent, consistent compliance improves your rating, and even it reduces the risk premium. Suppose if your let's take your CIBIL score is high, it will also reduce your rate of interest while bank is sanctioning you with a loan. Now bank use compliance scoring in internal risk models. Yes, they have many, they have a risk rating, before giving loan they do the internal risk rating, and more you are compliant, more you have fulfilled all the compliant and you are regular in everything, the more good rating you get, and the lesser requirement of your collateral comfort and less ROI is given to you. Yes, this is true, and there are chances you get more loan and enhancement easily when required, right? Now let's take an example. An MSME just applies for a loan, say working capital for of 20 lakhs, and he got sanctioned. 20 lakhs not 30 lakhs, because as I said, they had strong compliances, and they always applied for the on the other hand, MSME applied for loan of 50 lakhs. His loan was reduced to 30 lakhs. Why? Because he was very irregular with his compliances. Non-compliance always costs not just penalties, it costs you funding capacity, and it reduces your chances of loan sanction, right? Now, how can you stay compliant and bankable? Just as you automate your payments like SIP, you just automate your reminders, use your app or CA alerts for your GST, TDS deadlines. You can reconcile monthly, match your sales with your GST returns. You can digitize compliances, use maybe Tally, Joho, ERP. There are n numbers of accounting software that integrate with GST. If I agree you don't have that much of fund to manage this separately, you can also outsource them. Yes, there are many part-time accountant over there, or maybe you can have a CA who will look after your accounts. Please don't delay, but and you can keep your cloud records. You can store your filings in Drive, share them instantly with the bankers. You are thinking compliance is a cost? No, compliance is not a cost. It is an investment into the your credibility, and it will be fruitful when it is required to you. So today, let's wrap up. We have uncovered today why compliance is more than avoiding penalties, how GST acts as your hidden credit reports, now why PF, TDS, ROC filings silently affect your bankability, how non-compliance reduces your funding capacity, a roadmap to stay compliant, credible, and ready. Now, here's the truth. Compliance is not just paperwork, it is a trust. And in MSME finance, trust is everything. If whether if I talk about your MSME business, trust matters more. Now, this was my Smart Credit Bytes. Stay tuned for your next episode. Thank you. Until then, remember, discipline today builds eligibility tomorrow. Thank you.